Hi friends, this is the analysis of 29th of January 2020 for the trading plan for the 30th of January. So today was a very volatile day. Let's first have a look at the intraday chart. So if you see, today's range is about 70 point, but we have 50 point move four time. First it fell 50 points, then Nifty climbed back 50 point again 50 point down, and then we have 20 to 30 point up move. So today was a really very volatile day. This kind of day happens when the FIs and DIs are on the opposite side, and they mostly transact more than 1000 crores. You can go back to old data, and whenever there is 1000 crore plus or minus buying by FIs and reverses by DIs, you will have all this big swings intraday. Okay, so this kind of trading days are difficult to trade intraday because moves are very sharp. However, if you are trading positionally and if you have your stop loss in place, then it saves a lot of mental energy because you are not worried about the 20, 30 or 50 point frequent moves. So one way to avoid such kind of day is, first you try to find out what is the average to range. So the average to range is basically speaking the average movement in a day. It is not exactly like that, there is a little bit of calculation in that, but in layman language it is the average movement per day. So if you take the 20 period ATR, that means in last 20 days the average movement in Nifty is 113 point. So what I do basically, whenever I feel like market is becoming volatile, I sell option 100 point above or below. Basically speaking, whatever is the ATR, I go above and below that much amount from the market. So today was really volatile day, and hopefully if you would have traded out of the money option, you will be fine, else it would have been very difficult. Anyways, let's see what is in store for tomorrow. So let's look at the plain chart with long term moving averages. So as we were discussing last few days, 12,100 took support, and now market is in this intermediate critical range of 12,100 to 12,200. So still market is above 200 period moving average, which is at 11,650, and then 12,088 is the 50 period moving average. Market came below that and again closed above that. Last time also similar thing had happened. Market closed below the 50 period moving average, and again the next day it came above the 50 period moving average. So this is very critical. This range of 12,050 to 12,100 or whatever in that range, basically speaking, this 50 period moving average, until and unless it is crossed decisively, this kind of choppiness will be there. Okay, so that is from the long term chart perspective. So basically long term trend is still up, intermediate trend is in a very decisive zone, which you will be able to know after few days that intermediate trend is either going up or it is reversing to downside. Okay, now let's let's have a look at the momentum. Momentum has now slightly decreased from the downside, and it has increased to the upside. That means market was falling with speed. Now the histogram is positive. Previously it was more negative, now it is less negative, which is positive. Okay, so even though in intraday there was a frequent volatile movement, today's candle is not looking like that. It looks like there is support around 12,050 to 12,100, and market is trying to go back. However, if you see today's high and yesterday's high, both around 12,170, and also the 20 period moving the 10 period moving average is at 12,170. So this now it is very clear. If we go above that, there can be more short covering. Also we discussed yesterday, whenever put call ratio is below 1, there is heavy chance of short covering moves. So we should be careful, or we should plan accordingly. If we have short, we should take profit, or we should try to take intraday position with very small stop loss and exit fast, because if the intermediate trend is down, even if there is bounce back, it will not sustain. That is what happening from last 2 days. There are intraday bounce back, but those are not sustaining. Immediately it is coming down, and today we have one more thing added, that is volatility. So that's where your experience comes. Once you learn how to play different kind of market, and if you have seen this kind of situation in past, you will be able to cope up better. So always in the initial days, first 2-3 years, you keep your exposure to the market minimum. Try to learn, because this kind of day can wipe out your capital very fast. Even if in the daily candle it looks very small, 2-3 trades if you take in the opposite side, then it can cost you a lot of capital. Okay, now let's look at the open interest. In open interest, the call writing total outstanding call is at 12,200. So that should be that is a resistance level. Maximum put is at 12,000, which is a support level. Today the call writing has shifted, the call build up has shifted from 12,100 to 12,150. So the resistance has gone little up. Similarly, put writing previously yesterday it was at 12,050. Today maximum put build up is at 12,100. So now 12,100 looks like an very critical zone from where market can go up, or if this is broken again, then we have severe downside. And yesterday we were discussing about the head and shoulder. Head and shoulder will be confirmed once we close below that 12,050 range. Okay, now put call ratio has again increased from 0.99 to 1.13, which is positive. Max pain has also increased, which is also positive. VIX has decreased, which is good for the market. It has decreased around 5%. So that is good. Today again FIs have sold 1,000 crore, but interestingly today DIs have bought 1,500 crores, so which is good from the market perspective. Index future also today FIs have bought 400 crores, and then stock future also they have bought. So today in and all there is good buying. If you compare this 1,500, then 400, and this 800, 2,700 is the buying, and then 1,000 crore is the selling. So even though in the cash market FIs have sold a lot, still the overall figure looks positive. Okay, now index features, this is the total open interest. So they are minus 49,000. So previous till yesterday it was 54,000 contracts. So now it looks like short covering. Again Nifty OI has decreased, and market has gone up. That means it is short covering. Really, it looks like short covering. Similarly, previously this FI long short was 186,000 contract minus. Today it is 175,000. So through options, the position is now changing to bullish, little, from the negative to neutral or slight positive. So plan for tomorrow. I want to highlight one very important thing today. I always speak about this central pivot range, right? So whenever we have a narrow range, the next day could be a very trending day. So if you look at today's this CPL or CPR, whatever you call in different terminology, these three lines are coming together, right? This is because today's range was very narrow. Even though intraday there was too much volatility, this day range is very narrow. So tomorrow there could be a trending day, and we don't know the direction. So because there are heavy outstanding call position, calls written at 12,200, if tomorrow, and also tomorrow is an expiry, and that to monthly expiry. So in case tomorrow market goes above 12,200, there could be huge short covering. Huge means huge, 100 point also it can come very fast. So tomorrow you should look to buy if this 12,200 is crossed. Obviously we cannot ignore the downside move, but because this is monthly expiry, market is already down, the chances of making good money is on the upside if this 12,200 is crossed. If market continues again to go downside, then obviously that is what's happening and we cannot take a lot of advantage from that. Okay, so so for tomorrow the plan will be to trade both side actually. If you get if you see that market is crossing 12,200, that is a good place to take option, and that add the money option, it will be very cheap. So that should be the plan for tomorrow. Downside, it is now difficult to trade because if there is a gap down or if market fall 50 point, again we will be at the support zone of this 12,024 to 12,050. So for tomorrow, you can look to buy around, if you get a chance to buy around 12,050 to 12,070. And also the other trade would be if you get a chance to buy once the market crosses 12,200. So this would be the buying strategy. Selling would be if market goes towards again this 12,170 and gets resistance and it comes down. But it is important now to see that Saturday we have the budget, tomorrow is the expiry, Friday there might not be much of movement because people will wait for the budget. So if you, I don't know the kind of audience who is listening to this, but if you are not experienced 5 to 10 years in the market, it is better to do nothing and just watch and understand how the market is behaving, because next 2-3 days it is going to be really volatile. And when thousands of crores are being bought and sold in 5 and 10 minutes, it is better to relax and enjoy, because with as compared to this kind of huge money, we are nothing. So as until and unless both FIs and DIs are in the same direction, it is better to wait, watch and take care. So take care, trade well, and we'll see again tomorrow. Thank you. Bye bye. Good night.